Hello students and welcome to the classes. So students, as we know that we are covering the financial knowledge and basically we are doing the banking awareness part of it. All right. And so far in this topic, we have covered the various topics and the series you can say like we have covered the PFRDA. All right. What we have next covered, we have covered the SEBI, we have covered the SIDB, okay, and so many other important institutions, right? And few last lectures, what we are doing, basically, we are spreading our discussion over IDBI, right? This is the topic what we are discussing, okay? So before going further, what we will do, we will do a certain recap of the previous topics or the previous facts and figures which we had covered in the last lecture. All right. So basically, when we talk about the IDBI, all right, IDBI. So the first thing which I have told you that you must remember is that what is the definition of it, not a definition, or what is a full form of it. Okay. So when we talk about the IDBI, so the IDBI is basically stands for the Industrial Development Bank of India. Right? That was the full form of the IDBI which we had discovered. Okay. And the second thing which I told you in relation with the SIDB was that SIDB is basically Industries Development Bank of India. But what we do, we put small in front of it. Okay, so Small Industries Development Bank of India, it's a SIDB. Got the difference? When we talk about the IDBI, basically we are not focusing on any type of the industry, which we generally do in the case of SIDB. In SIDB, basically our focus is on MSME. We know that MSME stands for the micro, small and medium enterprises. Okay. Second thing, if we talk about the establishment, right? Establishment of the IDBI. So when did the IDBI was established? It was established on 2nd July 1964, right? That's what we had discussed. On this time when it was established, it was generally established as which? As wholly owned subsidiary of Reserve Bank of India. Right? That's what we had discussed, that it was established as a wholly owned subsidiary of Reserve Bank of India. Okay, but there was a time in 2004 when it was transferred from being in DFI to commercial bank, right? From DFI to the commercial bank. Okay, here DFI stands for which? DFI stands for Development Financial Institution. Right? So these are the details which we had discussed. Okay. IDBI stands for the Industrial Development Bank of India. Was established on 2nd July 1964 as a wholly owned subsidiary of Reserve Bank of India. Later on, it was a 2004 when it was transferred from DFI to the commercial bank, Development Financial Institution. Got it? So these are the some of the details which you should keep in your mind. If you can keep these details in your mind, so it will be easier for you that you will get other details as well as. Okay. So basically, right now we have do a little, you can say, the recap of the previous things. What we have covered so far, we have covered the overview of IDBI. We have seen the establishment. We have seen the transformation, like 2004. Okay. So what are the topics we left with? Basically, we left with the industrial finance banking. We left with the government ownership. We left with the IDBI bank, and we left with the summary part. Okay. So let's begin our journey with this. So basically, what we are going to start the industrial finance. Okay. Before this, let me give you a little bit overview of the previous thing. When we were discussing the previous lecture, remember I had told you one thing, and what was that? I had told you that basically what was happening on that time when we established the IDB. Okay, the banking system of India was not able to support the industries and support the corporation. Okay, because of the few reasons, and I had presented you the three main reasons. And what were these three main reasons? The first is inadequate capital. Okay. The second reason is preoccupied obligations. Okay. And the third is low growth rate. And what else? And risk association with them. Okay. So these are the three main factors behind this. First is the bank generally do not have sufficient capital so that they could cope up with the demands of the corporation or the industries. Second, the preoccupied obligations, like they have to cut the CRR, cash reserve ratio, SLR, statutory liquidity ratio. Okay, they have to lend their amount to the PSL, priority sector lendings, and whatsoever. Thereafter, I had told you low growth rate. It means that due to the inadequate financial credit facilities available with the industries, the industry is showing low growth rate. Okay, and second is because the businesses are part of the risk. So that's why if the bank is granting the loan to the industry, they are also facing the chances of having the risk. Okay, so these are the three main factors behind the incapability of the banking corporation to support the industries. Okay, so right now when we know that IDBI was established for the industrial finance, so we are going to start this topic. Okay, I hope now you are mentally prepared for our upcoming journey. Okay, so let's start. So the first is the providing long-term financial assistance. Okay, about short run and long run, I had told you in the previous lectures. Okay, here I'm just going to revise it. Short run is basically a short duration in which variable factors like raw material, electricity consumption, supply of workers, this could be changed. But we want to talk about the long term. Long term is a long duration and almost everything is changed simultaneously. Okay, so basically when we talk about the long term financial assistance, then it is very, very important. Okay, because it is not for 1 year, 2 year, 3 year, it is for basically 15 years, 20 years, and so long. So the first is providing long-term financial assistance. What do you mean by it? Let's see. As a DFI, Development Financial Institution, IDBI played a crucial role in providing long-term financial assistance to the wide range of industrial projects. Okay, so we can say when it was established as a DFI, okay, Development Financial Institution, so they have a separate category. They had to deal with the IDBI only. They are no longer dealing with the retail and the corporation banking. About it, I had told in the previous lecture that retail banking is basically the banking which the bank do with us, like me and you, okay, for the individuals. But when we talk about the corporate banking, then basically they are doing it on B2B model, business to business model, in which basically they are catering the demand of the businesses. Okay, so these are generally for the huge capital requirements. Okay, but suppose when the bank is granting a huge loans to the industries, and as I have told you already, that the industries are the part of the risk management. Okay, so eventually the bank is also risking its capital with the industrial finance. Okay, so generally, what was the practices with the banks? Banks could grant the loan to the business, but only for the short duration, in order to recover the amount faster. Okay, but as the time changes, okay, and when the IDBI was established as a DFI, now they got a different segment. They have to deal with the corporate banking only. Corporate banking only. Okay, they are no longer required to cater the retail banking. Okay, it means that the burden of retail and corporate on their capital has been reduced significantly, and they have to discharge their duty only as a corporate bank. All right, so that's why the IDBI got a crucial role, so that they could provide the long-term financial assistance to the wide range of industrial projects. Got my idea? Now let's move forward. So this long-term financing was typically structured to suit the specific need of these projects, which often required substantial capital investment over an extended period. Okay, like suppose when you are taking a short-term loan, for example, personal loan, it is best to understand the thing by applying it on you. Okay, so that you could connect the points more effectively and efficiently. When you are taking the personal loan, okay, so generally what happens? Two things are there. What are these two things? A small amount. Second, high interest rate. All right, like suppose you are taking the loan for some tour, you want to do something, you want to purchase something. Okay, so will you able to get the personal loan of 20 lakhs, 6 lakhs, 7 lakhs, 8 lakhs? Not possible. All right, it's hardly up to 2 lakhs and 3 lakhs maximum. Got the point? Okay, so generally it is of the small amount. Okay, and the interest rates are very high, like 19%, 15%, 60%. That's are the interest rates. Okay, so that the amount is small and the interest rate high. Because of this, generally the time period is short time period, because already the amount is 1 lakh, 2 lakh, so the individual could repay it easily, and also the high interest rate is there, so the individual tries to repay it as soon as possible. Okay, because he has to pay high interest otherwise. But when we talk about the long-term loans, like the house loan, okay, like the car loan, like you can say foreign education loan, and whatsoever. So these loans basically having two categories. First is large amount. Second is low interest rate. Okay, because if you're going for the house loan, you could not make your house in just 1 lakh rupees. You require 10 lakh, 15 lakhs. Okay, huge amount. Second, for the car loans, generally for 8 lakhs, 6 lakhs and more. Foreign education loan, like you are going for the foreign studies, so the minimum loan starts from 20 lakhs and more. All right, so the amount is generally high, and because of this the interests are generally low. All right, so amount is high, the individual could not pay it immediately, low interest rate, so that's why individual could borrow it for a long time. Okay, so because of this the time period is generally long. Got it? Okay. Now, what I'm going to do, I'm just connecting it with the concept so that you could understand. When we're talking about the personal loan, it's a kind of retail banking in the terms of industry. Like when the individual takes the loan, he will take the loan on a small amount and of the high interest rate. But assume these loans as a corporate loan. When the corporate takes the loan of 100 crores, 200 crores, 50, 60 crores, so generally large amount and low interest rates. So the individual loans are for the short time period. Suppose if you are taking the loan of 10 lakh, 15 lakhs, 20 lakhs, even you will get a years of 15 or 12 years. Okay. But when you go for the corporate loans and you are taking the loan for 100 crores, 200 crores, you will get a time period of 20 years, 35 years and more. All right. So the same thing is applicable in that area. Okay. Long-term financing was typically structured to suit the specific need of these projects because these projects are the corporate projects and they could not be fulfilled in a short duration. They are to be financed for a longer duration, so that they required a long duration loans, which often required substantial capital investment. As I have told you, the amounts are generally large. Okay. Over an extended period, 20 years, 25, 35, whatsoever. Got it? Now let's move forward. Thereafter, what we have the supporting diverse industrial sector. Okay, because as I've told you, the industrial sector is not unique. Even if you take the manufacturing are so many things. Okay, let's go. Suppose we are going for the manufacturing sector. For taking example, we are going for the tire. Okay. Tire is a manufacturing. In tire, there are so many types of tires, like tires for auto rickshaw, okay, tires for F1 car, okay, tires for muscle car, tire for family car or domestic cars, family cars you can say, okay, tires for luxury cars, tires for tractors, trucks, whatsoever. Okay, so even in tire, you could see that there are so many segments. Okay, and tire is a part of rubber industry. Got my idea? So now you could say that there are diverse industrial sector. Okay, so industrial finance is not only for a particular type of industry, but it is for diverse type of industries. NHB's financial assistance was not limited to a single industrial sector. It supported projects in various industrial segments, including but not limited to. We are going to see the segments and the sectors which are including it, but please remember we are not going to limit it to these sectors only. Okay, like the first is the infrastructure industries. Basically, we are talking about the construction basis industries. Okay, NHB played a significant role in financing infrastructure projects such as the development of roads, ports, airports, telecommunication and power generation and the distribution. Okay, because let me tell you one thing in a straightforward mode. When we talk about the development, when we talk about the industrial corridor, when we talk about the economical build-ups, basically the one crucial factor which is very common and which is the backbone of these projects is the infrastructure. Because infrastructure could, you can say, include each and everything required. It could include the accommodation, it could include the communication, it could include the transportation, it could include the deputation and whatever you can say. Okay, so when we talk about the development projects, so basically these are the part of infrastructure. And now you can see that the roads for transportation, ports for transportation, airports for transportation. Three main ways of transportations are the part of the infrastructure development. Okay. Similar thing is the telecommunication for coordination basis. Okay, power generation is very important. If you're planting the industry, if you're planting the plant, all right, what do you require? You require the power to be supplied, right? Thereafter, distribution. It means that suppose you have provided the infrastructure so that the raw material could reach the plant and machinery. Okay, but what if the finished product is not able to reach the market on time? Does this effort make any sense? No. You have made a product, but you're not getting a chances to sell it off in the market so that you could earn the profit, right? So that's why distribution is also an essential part. Okay. So like we can say generally that there are segments like coming of the raw material, processing raw material into the finished goods, and then distributing the finished goods into the market. All right. Thereafter, next is the manufacturing. Manufacturing is a very, very important sector because it is capable to employ large people. All right. Second, it is very, very important from the industrial development and exports part. Okay. Because when the things are being manufactured in your territory, you could easily export them to the other countries. Okay. So the first is NHB. NHB supported manufacturing projects ranging from traditional industries like textiles and chemicals to advanced manufacturing sectors like automotive and the electronics. Okay, so you can see that each and everything is the part of manufacturing. And when we talk about the manufacturing, like if I ask you what do you mean by the manufacturing? So manufacturing generally means, suppose this is the raw material. Okay, this is the processing, and thereafter this is the finished goods. All right. So what generally happen? Raw material come to the processing and processing goes into the finished good. Okay. So this is the part of manufacturing. All right. So manufacturing is basically this process, and it could include the industries like the textile industries, like the chemical industries, like the advanced manufacturing sectors like the automotive and the electronics. Okay. Services. In addition to the traditional industries, IDBI extended its support to the service sectors like the healthcare, information technology, and the hospitality. Okay, because these are the industries in their own. Got it? So that's why it is very, very important to promote it. Okay, like the healthcare you could promote, like the information technology you could promote, like the hospitality you could promote. Okay, now there is a point which I would like to share with you. Most of the time what I see with the people, like they claim, okay, manufacturing is a good because by manufacturing the goods, like you are manufacturing the goods. Okay, so you could sell it to the foreign market by the form of export, right? And what you will get in return to the country? The foreign currency, right? That is the point of many people. So they claim that we should promote the manufacturing on the higher basis, and we should not promote the services on the higher basis, because services, what you will do, like services, how do you can export them? Do you export your doctors and nurses to the country and sell them off so that you could get the foreign currency? No. Then why? But here is a point that you could, if we talk about the healthcare, okay, so you can say it could attract the foreign nationals. Okay, how? Suppose if Indian healthcare infrastructure and the sector is so good in the heart exchange, the liver transplant, okay, in the other diseases and problems, so you can assume that the foreign tourists and the foreign people who live in the other country, so that they could come to India for their treatment. And when they will come to India, they have the foreign currency which they will be converted into the Indian rupees so that they could handle the bills of India in the Indian territory, right? So we are getting the foreign currency. Same thing is with the information technology. Okay, like if we talk about the major economies like the United States of America and the Europe, in these major economies, basically we sell our products of the IT industry, like the software, okay, like CRC and so many things. Got it? So these are also the part of buying and selling, and we are getting the foreign currency. Hospitality, like you know that India is a vast country and we having an enormous potential of the tourism. If we maintain a good hospitality infrastructure, hotels, clubs, and whatever you can say, so we could attract the tourist. And when tourists come to India, they bring the foreign currency, which they converted into the Indian local currency, but we get the foreign currency, right? So now you can see that how we are promoting the service sector and we are getting the foreign currency, right? So that's why the point of supporting the goods only is invalid, and the point of supporting each and everything is a valid one. Got it? Now let's move forward. Thereafter, what we have the agriculture and agro processing. Okay. IDBI's assistance also extended to projects related to the agriculture and the agro processing, which are crucial for food security and the rural development. Okay. Thereafter, public and private sector projects. Okay. Now, public sectors are basically those sectors which are under the government of India. Okay. Private are those sectors which are generally under the private players. Okay. So when we talk about the public and the private sector projects, the first is IDBI's role was a DFI was not limited to supporting projects in the public sector, also extended its financial stance to the private sector enterprises, which we had already discussed in the industrial finance starting, that they are including but not limited to. Remember this line? Okay. This inclusive approach promoted a balanced and diversified industrial landscape in India. Like you cannot see that the Indian Industrial Development Bank of India is under the government of India, so that it should promote only the public sector because it's bring the welfare. Okay. But we promote a balanced approach so that we could promote the private sector also, which will bring the healthy competition and the overall economic development. Okay, so welfare and competition is a part of balanced approach of Indian economy, or you can say any healthy economy of the world. Growth and development. By providing long-term financial support to industrial projects, IDBI contributed to the industrial growth and economic development in India. Thereafter, job creation. It's an obvious thing that when there is economic growth, okay, development of job creation will be done. Industrial projects funded by IDBI generated employment opportunities both directly and indirectly, benefiting the labor force or those people who are eligible to work and looking for a job as well. Infrastructure development we have already seen. Projects in sectors like the infrastructure development enhanced the country's overall infrastructure, contributed to the economic progress of India. Thereafter, export promotion. I have told you, when there is a huge manufacturing base in India, automatically we will able to export the products on the world market. IDBI support to manufacturing and export oriented industries, promote exports, thereby earning foreign exchange and improving the balance of trade. Okay. Technological advancements. Many projects funded by IDBI involve technological advancement and modernization, making Indian industries more competitive and efficient. Regional development. IDBI's financing initiatives also had a positive impact on regional development, reducing regional disparities by facilitating industrial projects in different parts of the country. IDBI support to diverse industrial sectors aligned with the government vision of economic self-reliance, Atmanirbhar Bharat, and reducing dependency on imports. By fostering domestic industries, IDBI contributed to this goal by providing the financial help to the industries. Thereafter, risk assessment and mitigation. As a DFI, IDBI was equipped to assess and manage the risk associated with long-term digital projects, applied rigorous evaluation and due diligence to ensure that the funded projects had a higher probability of success, which was crucial for the institution financial stability and success of the projects it supported. Okay, so students, here we have finished the industrial finance. In the next lecture, we will continue with the remaining topics. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and say thank you.